pre-qualification, pre-approval, and the final approval that you get right before you go into underwriting. Can you speak to that a little bit?
Yes, I know it sounds so confusing because there's so many terminologies involved, and but in our industry, pretty much what pre-qual means is, someone calls me or they come in and they just want to know kind of briefly what they might qualify for. And what I would ask them is like, how's your credit? What's your gross income? What payments do you make every month? What ideally do you want to buy as a purchase price? If they don't know, I could figure that out for them. Once I know what their debts are per month and their gross income, I could tell them that they pre-qualify for X amount. However, to actually get a pre-approval, that's when they actually send me, and with us, we pretty much do a lot of things online anymore. So we'll have them upload their documents to us. So pay stubs, bank statements, W-2s, tax returns, and I see those with my eyes and I'm able to confirm what they told me is true. And not to say that people don't give me information that's valid and accurate. It's just a lot of times some people might think that I can use income that I can't. So for example, someone might tell me that they make $55,000 a year, but when I get their pay stubs, I see that maybe they make $30,000 a year and the rest is commission. That's where that changes.
Sure. Yeah. So before we go on to that final approval, so pre-qualify is verbal. So they tell you these things, and then pre-approval is when you've actually seen the documents and you know that what they told you on the phone is true.
That's exactly right. Yes, and we're validating what they told us matches up to what we talked about on the phone and making sure that it does calculate properly. And one of the things majorly as well is like if you're self-employed, for example, or you are commissioned, I really need to see those tax returns because we have to do an analysis of that. So sometimes someone might think if you're self-employed that you make a lot more than you do because self-employed people do tend to write off a lot of expenses in order to pay less in taxes.
Yes.
But when it comes to the home loan, then that is difficult because we look at the net amount and there's certain things that we can add back in, like depreciation. So we really have to look at the tax returns to see.
See what you can get. Okay. And then the final approval. So what does that look like for a buyer? Like these are all like terminologies that you and I know, but to, our listeners, they may not understand. What does that final approval look like?
Yes, that's totally a great question. Well, final and formal approval is basically once I've, received all the disclosures or the documents from my borrowers, what I just listed, those items. And then we send them disclosures that are state and federal disclosures that they need to sign. And again, since we do everything online, they just basically have to click through them. We get them back and then we bundle everything up and we send it on to processing and underwriting. And a true underwriter is going to make sure that my automated approval that I got when I sent it through automated underwriting, which is a system that reads credit, income, assets, debt to income ratios, that what the information that myself and my team have in there matches everything up, that we did our job properly, and that we didn't miss anything. And then that underwriter will then put her or his seal of approval onto the loan with conditions. Normally we get a formal approval with conditions or conditional approval. And mainly what that means is we try to make sure, that we have a clean, loan going in. But those are going to mainly look like contract, appraisal, title, insurance. And maybe, this is an example. Maybe we need one extra pay stub. Maybe we're missing a bank statement. Maybe we need proof that the earnest money cleared. So that's just formal approval with conditions. And then once we do go under contract, and that's where you come in, is that, skipping forward though, and we've gone through that whole contract process, we have the appraisal, we have title, insurance, all that in, then that is the final approval where they sign off on everything. And that's the magical clear to close that we all want to have.
So in my world, I call that commitment, which basically means, and you can correct me if I'm wrong, that
true, because it's on the contract that way.
But basically what that means is that the lender has now set that money aside for closing. But it's conditional based on these final things that need to happen. Like you said, one final pay stub, because maybe it takes 60 days for somebody to find something, and we want the most recent bank statements.
Right.
Okay. All right. I just wanted to make sure. So for our listeners out there, so what paperwork do they need to get pre-qualified, pre-approved? You know, what's the starting process with you?
Yeah, so, industry-wide, and it's not just our company, that Fairway Independent Mortgage, but it's industry-wide. We're all going to ask for the same documentation. Typically, I would say, if you're a W-2 individual, you need 2 recent pay stubs, 2 recent bank statements, all pages, your W-2s and tax returns for the last 2 years, and your photo ID.
Okay.
Is basically what you need.
So do you just want regular bank statements, or what about like a retirement statement as well? So like their 401k, or if they've got a Roth IRA or anything like that. Do you want to see those too? Or
I do, because I think it's really good. Sometimes we don't need them, and sometimes the system doesn't ask for it. And when I say the system, it means that us lenders, we have a system called automated underwriting that I was talking about. And sometimes, let's just say we have higher debt to income ratios, and the credit's a little not as high as we'd like to see. I can maybe sometimes turn a refer, which is kind of like a decline, into an approval with more assets.
Right.
So to your point, the more assets I can show, it makes for a stronger file.
Right.
So if you have a 401k, IRA, CDs, things like that, yes, please give those to your lender, because that would be extremely helpful for you.
Yeah. Perfect. So I know the why, but maybe you can touch on it a little bit more. Why get pre-approved, or at least pre-qualified before you go look for a home?
Yes, really good question. Well, mainly, like I was saying before, like Lisa, I see her as, she's a realtor. She's an agent that has the licensing and all that, and she is the guru of all that is houses. I am not. I'm just a lender. But Lisa will want to show you the home that you want to see. And she doesn't want to drive you around and waste your time if you have not been formally approved, or at least pre-approved by a lender. So first of all, so you guys have a starting point of how much do you qualify for?
Correct.
So maybe you have a client that says, I really want to buy a house at $550,000, but they really only qualify for $450,000.
Right.
That's the major reason. The other thing too is sometimes there's little surprises that show up. Let me give you an example. Let's just say that we're doing our credit checks and there's an unpaid judgment that pops up in the background and my team's doing their work behind the scenes, or we're planning on a certain amount of assets to qualify, but once we verify the assets in the account, they don't have sufficient funds to close.
Correct.
So these are really important things to have in line and have in place before, really, in my opinion, that you go and write an offer on the house. It just gives you peace of mind.
Right.
And gives you peace of mind knowing that you're writing a really solid contract for the seller and the buyer.
Right. Yeah. Well, and from the real estate perspective, as a realtor, it's important to know how much you qualify for, because I'm a realtor that if you say you qualify for $450,000 and that's your max, then we're going to stay $450,000 and under. That doesn't mean I'm not going to look a little bit above, but those properties need to have been on the market for a while where I think we can put an offer in that's lower that's going to match that. The other thing too is that most sellers and other realtors will not accept an offer if we do not have a letter that comes with the offer that says that you've already been to a lender, you qualify for this amount, and that it's solid. So my preference is that you talk to Melanie or a lender, whoever you choose to use, and you make sure you get that taken care of first, and you've got that letter ready to go, because it happens all the time. Every realtor will tell you this, that you walk into a home and you love it and then you don't qualify for it.